Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty declined for the seventh day after a volatile trading session. Mid-caps and banking stocks outperformed the indices. Gold and silver at new record highs as the demand for safe haven buying remains strong. Silver continues to outpace gold in 2025. Brent crude prices ease after touching the $70 mark. The oil ministry flags low valuation of enterprises under its wing, promises performance-linked pay for top executives and price stability, rules out levies like windfall tax, and plans value unlocking through disinvestment. Tata Capital and WeWork announce IPO pricing as the rush to go public intensifies. More than 73 companies have listed on Dalal Street so far this year, raising more than 1 lakh crore rupees cumulatively. President Trump is set to hold last-ditch negotiations to avoid a government shutdown. He will meet top congressional leaders later today with 72 hours to go for the deadline. Stock markets tread with caution across Europe and the US. Jaguar and Land Rover gets the British government's guarantee on loans worth £1.5 billion to protect its supply chain. The automaker's factories have been forced to shut down for nearly a month after a cyber attack. The death toll after a stampede at actor-turned-politician Vijay's rally in Tamil Nadu rises to 41. Vijay's party moves the High Court alleging sabotage. Chief Minister Stalin says new rules will be framed for holding public events. The Union Finance Minister Nirmala Sitharaman meets the families of victims. Elon Musk's social media platform X will challenge the Karnataka High Court verdict upholding the government's power to order removal of content. The company says it will move the Supreme Court to defend the freedom of expression. Well, let's start with the day's market action. A volatile day saw the Sensex and the Nifty closing flat, but with a slight negative bias. Both markets closing lower for the seventh straight session. The Nifty closed below the 24,700 mark, but absolutely flat, just about in the red. The Sensex down by about 60 points, but bucking the trend was the Nifty Midcap, up by 150-odd points, and the Nifty Bank up by 70 points. So really nothing kind of closed there for our markets, but we did see at least the Nifty Midcap and the Nifty Bank closing in positive territory. Well, let's now move to gold prices hitting a record high yet again. This as safe haven demand was boosted by concerns over a potential U.S. government shutdown this week. President Trump will meet top Republican and Democratic leaders in Congress in an attempt to hold negotiations to avoid a government shutdown. The government will face a partial shutdown unless lawmakers can agree on a federal spending bill. A weaker dollar and increased hopes of a further rate cut by the Fed after inline U.S. inflation data also supported the bullion. Meanwhile, silver outpacing gold, soaring to more than 10-year highs. So the rally there continues for both gold and silver. To the IPO market, Tata Capital has set a price band of 310 to 326 rupees a share for its 15,000 crore rupee IPO. The date of subscription has been scheduled for the 6th of October, the largest IPO of 2025 so far. It will comprise of a fresh issue and an offer for sale component. And co-working giant WeWork has also set a price range of 615 to 648 rupees a share for its upcoming IPO. The subscription will open on the 3rd of October. The company is looking to raise around 3,000 crore rupees purely via the offer for sale route. And more than 70 companies have gone public so far in 2025, raising more than 1 lakh crore rupees. But a majority of the large offers are now trading below the IPO price. Hormuz is here with the IPO report card. Hormuz, 2025 record year in terms of the number of IPOs and fund collection so far. But what's the IPO performance post-listing?
Yeah, it almost seems like somebody has opened the floodgates when it comes to the IPO market, and we've had 73 IPOs so far. But if you take a look at that, a third of them have just come in the month of September, and this I'm not counting the one that opens tomorrow, which is the final day of the month. So that will take the total tally to 25 IPOs that have opened in the month of September already. Now, it's not as if the markets are doing really great, and hence there is a rush to go public to capitalize on the healthy market sentiment. You take a look at the calendar year quarter, which is the January to March period when the Nifty struggled. We had 9 IPOs. Now, in fact, in the month of March, we did not have a single IPO. Now, in the second quarter, after making the tariff lows, the market saw some bit of recovery. The primary activity picked up. And in the third quarter, which is the July to September period, when the markets are actually down 3%, the number of IPOs is almost half a century, which is 50 IPOs, which includes the one that will open tomorrow. So that will like 50 IPOs in the third quarter itself. Now, you take a look at the size as well. Now, a majority of these IPOs that have opened so far, around 73, 74 odd, majority, that is 35 of them, are priced below 500 crore rupees. The mega ones, of course, one is HDB Financial and the Tata Capital IPO which opens, that is one of them. And the 1,000 to 5,000 crore bit has around 18 names, then the 500 to 1,000 crore bit has more than 20 names. Now, the bigger takeaway is the fact that bigger the IPO size does not guarantee you big returns. Now, 3 out of the 5 IPOs, the largest ones this year so far, are trading below their IPO price. In fact, HDB Financial, the largest of the year, had even slipped below its IPO price in intraday trading before a brief recovery from the lows, and NSDL is the only standout here, 49% above its IPO price and also significantly below its post-listing high. Now, there is a flurry of IPOs that are still upcoming. You spoke of WeWork, you spoke of Tata Capital. We heard from the management of Prestige Estates recently. They said that if all goes to plan, the Prestige Hospitality IPO comes up pretty soon. There is a PhysicsWallah IPO lined up, there is a LG Electronics lined up, and a Hero FinCorp lined up as well. So it's not as if the IPO rush is over anytime soon. We still have major ones lined up in the future as well.
Yes, we do, Hormuz. Many thanks for joining us. That's IPO Street for you. Now, the big global story. The Trump administration is considering the imposition of tariffs on foreign electronic devices based on the number of chips in each device. Reuters reports that the Commerce Department would impose a tariff equal to a percentage of the estimated value of the product's chip content. If implemented, the plan will impact a wide range of consumer products from electric toothbrushes to laptops. So this is the latest tariff threat. U.S. Commerce Secretary Howard Lutnick has hit out at India once again. Lutnick included India's name in a list of countries he claimed the U.S. needs to fix. In an interview, Lutnick said countries like India, Switzerland and Brazil need to react correctly to America, open their markets and stop taking actions that harm America. He added that India needs to play ball with President Trump if they want to be able to sell to the American consumer. His comments comes just days after Commerce Minister Piyush Goyal visited the U.S. to hold talks on bilateral trade and investment agreement. The British government has stepped in to provide financial support for Jaguar Land Rover after a cyber attack that stopped production for nearly a month. The government will underwrite a £1.5 billion loan guarantee to support the company's cash reserves and help pay suppliers. The loan, which is from a commercial bank, will be repaid over 5 years. JLR has promised to resume operations, quote-unquote, in the coming days without any specific details. As things stand, the factories will remain shut at least till the 1st of October. Shares of Bharat Electronics surging in trade after reports indicated that the army has issued a tender worth 30,000 crore rupees to the company. This tender will entail the procurement of the quick reaction surface-to-air missiles, air defense missile systems. The report further highlights that the army plans to procure 5 to 6 regiments of the indigenously developed Anant Shastra weapon system. Remember, the Defence Acquisition Council had cleared the procurement proposal for this project shortly after Operation Sindoor in May. Well, we'll head into a break, but up next, Elon Musk's social media platform X will challenge the Karnataka High Court verdict, upholding the government's power to order the removal of content. That and more when we return. Well, the big national story, the death toll from the stampede in Tamil Nadu's Karur during actor-turned-politician Vijay's rally has risen now to 41. The victims include 13 women, 9 children. Vijay's party has moved the High Court alleging sabotage and demanded a CBI investigation. Chief Minister Stalin has said new rules will be framed for holding public events. Finance Minister Nirmala Sitharaman visited the site and met with the injured and the families of the victims. The Kerala Assembly has unanimously passed a resolution opposing the Election Commission of India's move to conduct a special intensive revision of the electoral rolls in the state. The resolution expressed concern that the exercise could become a backdoor attempt to implement the National Population Register. It highlighted that the SIR requires long-term preparation, and rushing through the process casts a shadow of doubt over the Election Commission's intentions. The resolution was moved by Chief Minister Pinarayi Vijayan. Elon Musk's social media platform X will challenge the Karnataka High Court's verdict, upholding the government's power to order the removal of content. The company said it will move the Supreme Court to defend the freedom of expression, arguing that the government's Sayog portal will allow police to issue arbitrary takedown orders without due process or a hearing. Well, in news Coming in, global tax service provider Ryan has announced a strategic investment in Dhruva Advisors to create a joint venture in India. As part of this partnership, Ryan will acquire a majority stake and its senior leadership will join the board of Dhruva. The partners of Dhruva will acquire equity in Ryan. And Dinesh Kanabar, the CEO of Dhruva Advisors, will become a vice chairman of Ryan. The move is expected to help expand Dhruva's presence in Asia and the Middle East. Joining us now to discuss this deal is Dinesh Kanabar and Brint Ryan, chairman and CEO at Ryan. Gentlemen, congratulations and many thanks for joining us here on CNBC-TV18. Mr. Kanabar, let me start with you. The decision to actually get Ryan on board as a majority partner, this decision for a joint venture, what was the rationale driving this decision, Mr. Kanabar?
Shirin, we have grown into becoming probably the foremost tax firm both in India and the UAE. We just recently expanded into Saudi Arabia. We are there in Singapore. And the question was that how do we provide our Indian clients with a global footprint? And how do we, so we continue to aspire to be a regional firm. At the same time, we found Ryan to be a global leader in tax services. It is probably the world's largest tax-only firm, and Brint has been growing that firm for the last 34 years. Significant presence in USA, Canada, UK, and going forward into Europe, with little or no presence in India, Middle East, and Singapore. They have a back office in India, a delivery center with about 1,600 people. And they were looking at somebody who could service their clients in India, Middle East, and Singapore. So we thought it was a natural fit. We give them a majority only so that they can consolidate the results in India. But in effect, this is a partnership. We look upon this as a partnership where we benefit from the Ryan network, are able to provide global services to our Indian clients, opportunity to our people to train globally and get access to global technologies in tax, and in turn provide services to the Ryan clients, global clients in India and in GCC.
Well, let me get Brint Ryan to comment on that. Mr. Ryan, many thanks for joining us. So what drew you to Dinesh Kanabar and Dhruva?
Well, thank you so much for having us this afternoon. We believe that the Dhruva team has built a phenomenal business across India and the Middle East. And frankly, we could not have found a better partner to help us on our ambition to have a tax services firm that can serve our clients wherever around the globe they may need us. The cultural alignment, the go-to-market alignment, and the cultural alignment of the companies are just dramatic, and we're very excited to be part of it. India has been an important market for us from a delivery standpoint for many years. And we're very proud that our firm was ranked number 45 on India's Great Place to Work list this year. And we're really looking forward to bringing frontline service delivery capability through Dhruva to India and the Middle East.
Well, that's good to hear. But Mr. Kanabar, given the volatile environment that we live in, I would imagine that there's going to be a lot of demand for your services, particularly for your Indian clients looking at the US market specifically. And they're probably going to lean on Brint and his team. But the timing is interesting. And do you believe that this actually works to your advantage?
Yes, indeed. As you look at Shirin today, everybody is rejigging the supply chain. Everybody is looking at trade policies. That's something which Ryan is hugely invested in, both in USA and in Europe. And so are we here in India. And the point really is that how do we provide that service to our clients? And the question is, how do we provide that service to our clients globally? People are going to increasingly relook at the supply chain. People are going to relook and ensure that the trade and tariff barriers which have been set are something which can be addressed appropriately. So yes, it's a, and again, Shirin, none of these happens overnight. Our discussions have been with Ryan, have been going on for the last couple of years, where we sought to align our culture, our values, our processes, our systems. It just happens that this is a time when we reach a fruition. But to your point, is this a point of time where we see benefiting from the current environment? Absolutely, yes, we do.
So, Brint, what is the aspiration now that you do have this joint venture with Dhruva? Of course, expanding the current universe of clients that you have, but also looking at new markets together. What is the aspiration on that front?
That's one of the key elements of this partnership is that we plan to grow both of our organizations and into new markets. We've already identified several new markets and new opportunities that we will pursue together. Frankly, there's no better time to have done this transaction. I mean, if you look at the business that we're in, tax is the quintessential growth industry. It grows globally 5 to 7% every year. And as you well know, it becomes more and more complex. So now more than ever, the world needs a scaled specialist to help them solve problems, no matter where in the world they might find themselves.
Well, not just recession-proof, but perhaps also tariff-proof in many ways. So that is the environment that we are currently living in. But Mr. Kanabar, you talked about some of the contours of this deal, but is there likely to be a name change as well? I mean, take us through what we can now expect as you enter this new future.
No, not really. We continue to operate as Dhruva. The Ryan team recognizes that Dhruva is a great brand in this part of the world. And whether it is India, whether it is Middle East, whether it is Southeast Asia, we'll continue to operate as Dhruva. Of course, we'll be an affiliate of Ryan. We speak about many of these things, and obviously these are the things which come into when one speaks about a transaction. But we have been talking, Shirin, you and I, a number of times, for example, that globally, tax is becoming one. So we are looking at pillar 1, pillar 2, the challenges in and around that. Your ability to provide a seamless tax service around the world is becoming very, very critical. And it is this where the partnership between Ryan and Dhruva becomes very, very more important. The name continues as it is, our organization, ethos continues as it is. My interaction with you, Shirin, whether it is during budget time or otherwise, continues as it is. I don't think any of that is changing. I continue to be the chairman and CEO of Dhruva Advisors and just take on an additional responsibility of maybe contributing to the growth of Ryan globally and providing my strategic inputs as a vice chairman of the firm.
Well, we continue to hope to have you joining us on our shows, Mr. Kanabar, as you've done over the past 2 decades of CNBC-TV18's existence. But Brint, coming back to what you're hearing from your clients at this point in time, there is a fair degree of flux, volatility, uncertainty. But what does that mean then? Your transaction is done with Dhruva, but what does it mean in terms of both inbound FDI, outbound FDI? What are you hearing from your clients in terms of the appetite to get business done in these uncertain times?
Well, we remain very busy around the world trying to help our clients, solve complex tax problems, as they continue to make investments in a more dynamic and ever more complex environment. They need expert help, and they need expert help from a team that can go to market as one team, which is one of the unique attributes of what we've built at Ryan and what we have partnered with Dhruva. So we're still seeing, robust opportunities, across the world to help our clients pay what they owe, but no more.
Well, Brint and Mr. Kanabar, we wish you the very best of luck. Congratulations once again on this new partnership, and we look forward to hearing from both of you in future as well. Thanks very much for your time today. With that, it is time for us to wrap up this edition of Business 360 from all of us here on the team. For now, many thanks for watching. Stay tuned. The news will continue on CNBC TV 18. We're back in a moment.